Okay, let's jump right in. We're doing a deep dive today into something quite, well, paradoxical in the central London office market.
Right. You see all these headlines about property gloom, uncertainty.
Exactly. But then you have Great Portland Estates, GPE, this major central London landlord, and they seem to be, I don't know, hitting the accelerator.
It's a fascinating contrast. And the key, I think, the place to start is just the sheer momentum they've built. Look at their first half leasing numbers.
Yeah, tell us about that.
So they pulled in 37.6 million in annual rent. Now, the striking thing is that figure, that equals their entire leasing volume from the whole previous financial year.
Wow. Okay, so a full year's work done in what, 6 months?
Pretty much. And here's the kicker, the bit that really tells the story about the market itself.
Go on.
That leasing activity, it wasn't just meeting expectations. It came in 7.1% ahead of the valuer's estimated rental values, the ERVs.
Right, 7.1% above ERV. Why is that specific number so significant? What does that signal to you?
It signals that we're really looking at a two-tier market in London now. It's not one single office market anymore.
A tale of two cities kind of thing.
Exactly. Prime versus everything else. The overall demand might feel a bit soft, but for the really high quality, the sustainable, the well-located stock, it's incredibly competitive.
So GPE is basically selling into that scarcity.
Precisely. And their CEO, Toby Courtauld, he pointed this out. The shortage of that top-tier product, it's really shifted the bargaining power back to landlords who can actually deliver it.
Which explains their strategy, I suppose, focusing squarely on that premium end.
They're forecasting rental growth across the portfolio, sure. But specifically for their prime offices, they're expecting something like 6 to 10% this year.
Okay, so they're confident. Where's that demand actually coming from then? What specific products are hitting the mark?
Well, the real standout seems to be their fully managed offices. This is their flexible, amenity-rich option. Think ready-to-go space, lots of services.
The hassle-free option.
Basically, yeah. And that generated $19.1 million of the rent in the first half. And crucially, you can see who's taking this space.
Who?
Technology and AI tenants. They now make up 18.5% of that fully managed portfolio. It seems they're the ones really demanding that specific flexible serviced package.
That makes a lot of sense. Fast-growing companies, they want plug-and-play, instant operational capacity. But it wasn't just the fully managed space doing well, was it?
No, not at all. Their other category, the ready-to-fit leases, these are more like shells, allowing tenants to customize those, were also really strong.
How strong?
They actually beat the ERV estimates by 8%, which is even higher than the fully managed beat. And that includes a big pre-let to CD&R at 30 Duke Street.
And you mentioned something about resilience, a quick turnaround.
Oh, yeah, at Kent House. It's a perfect little case study. Synthese moved out, and Vanta, a compliance automation platform, moved in almost immediately. I think there was only a 4-week gap.
4 weeks. In this market, that's incredibly fast. Shows the demand is real.
It really demonstrates the desirability of that specific product, even when the broader market feels sluggish. Maximum efficiency.
And this demand, this willingness to pay for quality, it's showing up in some pretty eye-watering rental figures, isn't it?
It absolutely is. You look at some of their recent refurbishments. 141 Warder Street, that Art Deco building. It's barely getting $279 per square foot already.
279. Wow. For refurbished space.
Yeah, it kind of sets a new benchmark for that area.
Yeah.
And they're aiming even higher. At 170 Piccadilly, which just reopened, they're targeting, I think, £300 per square foot for the best of the managed space there.
300 pounds a square foot. And you're saying this isn't just speculative hopefulness.
No, I think it's a direct result of that supply scarcity we talked about.
No.
Tenants will pay for the right spec, the right location, the right amenities.
Okay, so the operational side looks fantastic, but growth like this needs fuel. How are they positioned financially to keep this pipeline going?
Their foundation seems really solid. Moody's just reaffirmed their Bad 2 rating stable outlook. That was back in September.
So low credit risk, access to relatively cheap funding.
Exactly, which lets them make strategic moves. Like they recently bought the Gaggle over in WC1 for about £18 million.
And the plan there?
It's part of assembling a larger cluster. They're aiming to build up a 220,000 square foot grade A hub in Fitzrovia. It's about creating these high-spec nodes.
Right, building critical mass in key locations. So let's pull this together for the listener. What's the core takeaway from digging into GPE's performance?
I think the main conclusion is pretty clear. The overall London leasing market might look, a bit narrow, maybe struggling in parts,
What?
but the demand for the genuinely high-spec, high-service, sustainable space, that demand is deep. And landlords like GPE who can deliver that are, as the source material puts it, comfortably on the right side of scarcity.
Right. Playing in a different league, almost.
It seems that way. And it leads to a really provocative thought, doesn't it? Especially thinking about that fully managed product being the star attraction.
What's that?
Well, if tenants increasingly favor these fully curated, immediately operational service packages, are they signaling they don't just want space anymore?
You mean they want space as a service, essentially?
Kind of.
Mhm.
And if that's the trend, how does that fundamentally shift the traditional office lease model? The one based on long terms, big upfront capital costs for fit-outs. How does that change the game for all commercial landlords, not just the premium ones at the very top?
A potential permanent shift in what it means to be an office landlord. Definitely something to mull over.